Hello and welcome to this video. In this video I'm going to share why I believe it's better to invest in real estate than it is to invest in stock and shares. If you like my video or any of my videos, hit the like button below or subscribe to my channel for more of these videos. Let's get to looking at stock and shares first and why I believe they are not a good investment compared to real estate. Number one, you cannot buy stock with no money. You have to have the exact amount the share or stock value is worth for you to be able to buy the actual share. Number two, you have to buy and own stock before making return. Usually these returns are called dividend payment. They are paid monthly, quarterly, half yearly and yearly. Number three, for you to be able to buy a stock, you need to have 100% of the share price. Say you want to buy an Amazon share price that costs say £5,000, you have to have £5,000 cash to be able to buy that share. Number four, the banks do not borrow you money to buy shares of any company, regardless what the status of the company is, regardless how profitable that company is. The bank will never ever lend you money to go and buy stock. Number five, you cannot manage stock and shares unless you are a sophisticated investor. So i.e., there's no sort of way you can make any money without actually owning that stock or share. Number six, the stock market can crash at any time and you could lose all your investment in 1 minute. Number seven, you do not have control over your own investment. If the company performs badly, your dividend payment is reduced or you will not receive your dividend payment. And if the company liquidates, your investment is wiped off. You would lose everything. And number eight, according to Business Insider, stock market returns only generate 9.2% over the past 10 years. As you can see, 9.2% doesn't really worth you losing all your investment. Let's now get to the reason why I believe investing in real estate is better than investing in stock and shares. Property prices always goes up. When you buy a property today, it appreciates in value every single year. For example, property prices goes up in average between 2000 to 2020 from 95,000 to 236,000. That is 148% increase. That is nearly triple the value of the property according to the land registry website. Number two, you could buy a property with none of your money. Number three, you can control and make money without owning the property. There are some strategies that you could use, like rent to rent. This is where you rent the property out from a landlord and rent it out room by room basis, or use that specific property as a service accommodation property, or you could structure a lease option agreement. Number four, you can buy a house as little as 10% of its actual value. Number five, the bank can lend you money to buy a house. Say you want to buy a house that's worth 100,000, you can walk into a bank and say you've got a property worth 100,000, you'd like them to borrow you money to buy it. They can borrow you 75% of the actual value of that house. If that house was 100,000, the bank would borrow you 75,000 of the value of that property. And also, the good thing about investing in properties also, if the property appreciates in value and you've got equity in those properties, you can borrow money against those properties to invest either in properties or any business adventures. Number six, you have fixed and steady income. And the good news is rental income always increases in a yearly basis. Number seven, any expense is also tax deductible. Say, for example, you had repair and maintenance for your property, maybe painting and decorating, or something goes wrong with the property. You can fix the property and deduct that from your gross income. Management fees is also tax deductible, as well as interest payment is also tax deductible, especially if you bought that property in a company name. Number eight, you make money in properties in four ways. Number one, buying the property at discount, right? You can buy the property at discount, hold on to it for a few months, remortgage it and pull all the discount out. Number two, you can buy a rundown property, do it up, add value and remortgage it and pull all that value back out. Number four, you can rent it out. You can simply rent it out and generate amazing net cash flow. And number four, you can gain from capital appreciation. When you hold on to the property for a few years, it goes up in value, you remortgage it and pull all that money back out. Number 9, you could be a management agent with little or no barrier to entry. You could manage those properties and charge fees. These 9 points are the reason why I believe investing in properties is better than investing in stock and shares. I hope this video has helped you understand the difference between investing in real estate and the stock market. If you like this video or any of my videos, hit the like button below and subscribe to my channel. I look forward to sharing more videos. Thank you.